Today we're going to be covering how do you leverage business credit cards to go buy real estate. Now this is a unique topic because in today's economy it's harder to borrow money than ever before, and you always have to be thinking creatively so you can get the best deals and so you can take action right now on real estate. Now if you're somebody out there who's already in real estate or is aspiring to get in real estate, this is an opportunity for you to leverage business credit to go do so right freaking now.
Damn, look at that, they broke the mold. Give me some more, make it overdose.
We got to begin by understanding what credit is and what type of credit is and all the things in between, because business credit is very similar to personal credit, but we got to start with our personal, because unless you're a huge operation, you've got millions of sales and maybe even a large C corporation, most of the time when you apply for credit, it doesn't even matter what type of credit. If you're a small business, they're going to depend on your personal credit first. Now that doesn't mean it's going to go on your personal credit report, but they have to believe that you, the owner, have the worthiness of paying them back. See, that's what banks really rely on. They're relying on determining if you're a credible person that will pay back. And how do they do that? They look at your credit score, they look at your credit report, and they determine that first. Now, what is good credit? Good credit is defined as a credit score greater than 740. What is bad credit? Typically lower than 650. Now, how did these scores get calculated? It's three things. Number one, utilization. So they look at how much of your extended credit today, so let's say $10,000 in credit cards, how much of that are you using on a monthly basis, or at least keeping a balance, right? If you pay it off every month, it doesn't matter, but if you keep a balance, they want to know the utilization. Now, banks look for 30% or lower. So if you have a 30% or lower utilization rate, you probably have decent credit. In addition to that, they're looking at types of credit. So they're saying, do you have a good mix of, let's call it a mortgage and a car or credit cards? These are different types of credit, like revolving versus installment. And they look at these and they say, hey, do they have the capacity to pay credit cards and maybe an auto loan? Like, are they credit worthy because they understand different payment types? And then they look at payment history. How long have you had these cards, these payments, and how long have you been paying them on time? These three factors will determine your credit score. And if you have a good credit score, when you go and you borrow money on behalf of your business, you look good. So knowing that we have a good credit score or don't have a good credit score is a good understanding if we're going to be able to get extended lines of credit to our business. Now, what is business credit? Business credit could be one of two things in most cases. It's a line of credit or a credit card. Very similar to each other, except one is in the form of a card and the other one is a form of an account that you can go to the bank and draw from. It's very similar, but a little uniquely different. Now, a line of credit is a very hard thing to get today because typically you have to go to a bank and you have to sit down with your banker and you got to talk them through the process, and then you got to promise that you're a good person. It's this whole mess, right? So lines of credit are cool if you can get them. However, it's very difficult today. So in today's video, as I mentioned, we're going to talk about credit cards because they're so easy. You literally go online and find the application, you fill it out, you put your business's information, put your information in, boom, in a minute, you either qualify or you don't. In addition to that, access to the funds are in like 3 to 5 days, which is amazing, and you can get really high limits. Like for an example, you could get a $25,000 credit card in 3 to 5 days, versus if you go to a bank and you go get a line of credit, you could spend 30 to 60 days just to get $25,000. So as you can see, credit cards have a very valid role. So just remember that getting a credit card is just like you would do for your personal, under your name, but it is for your business. Now let's talk about why this is a great strategy. If you are getting business credit cards, just so you know, even though they rely on your credit worthiness as an individual, once you obtain your business credit card, it doesn't go on your personal credit report. So this is very cool because you could get a $100,000 line of credit cards, and guess what? Whenever you charge it, let's say you charge to $90,000, it doesn't show up on your credit report. Isn't that cool? Because if you had a personal credit card and you charged $90,000 and you had a $100,000 limit, guess what? Your credit score would go down because your utilization goes down. So remember, they use your personal credit to determine if they will lend you money or issue a credit card, but they don't report to the bureaus that you have this credit card. So it's so cool because it's like you have the secret credit card in your wallet that nobody even knows about, only you, the bureaus don't even know. So if an example, if you had a personal credit card and you did this, then they would know. And so when you go buy a mortgage or you buy a car, they're gonna be like, oh man, we can't lend to you. You like max out all of your cards. Well, you can max out your business cards and nobody would ever even know. Isn't that cool? So now that you know about that, now what do? How do you get one? Well, the first step is to have a business. If you don't have a business, you're gonna have to start one. Now, what is a business? The bank defines a business as an LLC that has an EIN. So that's so simple, right? So how do you get an LLC? Honest truth, there are so many websites to do it. As long as you have an LLC and an EIN, which stands for Employer Identification Number. Now that is kind of like a social issued to your business. If you have these two things, you can apply for a business credit card. And in fact, you don't even have to have it open for months or years. You can open it today and apply tomorrow, because the majority of decisions when extending credit cards to a business is based on a person's creditworthiness, not the business, because the business truthfully doesn't have anything to offer. They have to base the decision on you. So if you open an LLC today and you go out and you borrow tomorrow from the credit cards, it is possible to do that. So the next thing you'd probably be asking yourself is, if I did this, David, how much could I expect to receive from these credit cards? That's a great question. Now, this will vary depending on your credit worthiness, but on average, most of these credit cards will issue you $10,000 to $25,000 on your first application. Here you go, $10,000 to $25,000. Now, why do you think it's 10 to 20? It's typically because businesses need larger credit limits than most normal people. If you were like, say, applying for your first credit card as an individual, they would issue you like $2,500 or $5,000, but businesses usually start around $10,000. So think about it this way. If you went and applied and you got 3 cards and they all gave you $25,000, you would have $75,000 in credit cards to use towards real estate. That's amazing in a very short amount of period. So this is how you get your credit extended to you. So now you're probably wondering, if I did get $75,000, how do I use it towards real estate? I mean, I know you're probably thinking you can't go to a seller rather and say, hey, here's my credit card, you just charge it. That's not gonna work, right? You really have to have a strategy for this. So first thing you would want to do is determine if you could take the cash out. And there are different services that can be done. I'll put a few links down below to different companies that allow you to take the money off of the credit card. Typically, you could either do a cash advance or you could do a transfer. There are other websites that you could take your credit card to and they would send out a check on your behalf using your credit card. So there are different services that you can maximize to take the funds off of the card, because traditionally you couldn't go buy a property with a credit card, but you surely can take the funds off of the credit card using a third-party service. Now, I would caution you, I've seen this before where they'll get the credit card issued to their business and they'll go to their own merchant services account, their credit card terminal, and they'll swipe it for $30,000. You don't want to do that, because the bank may get a little pissed off and say, hey, you can't do that. No. Specifically your credit card processor, because they're going to see that the companies are the same companies, and the credit card processors don't want to get in trouble, so they may stop you from being able to do this. So be careful. So once you get the money into your credit cards, you can now take it off using a third-party service. All right, now we need to determine what type of credit card or what companies to get the credit cards from. Now, you know all these companies: American Express, Chase, Wells Fargo. All of these companies typically offer a business credit card with 0% interest for an introductory period. The introductory period varies between 12 and 18 months, and what that does is it gives you the opportunity to borrow the money off of these cards for a 12 to 18 month period with 0% and just pay the minimum monthly payment. So there is going to be a monthly payment due, but it's a minimum payment towards the principal, no interest. So that's really cool, because now you can borrow, let's call it $10,000 interest free for 18 months. That's incredible. Now, picking the cards is not that hard. Find 0%. Then you probably want to look at the annual fee. If it's like $100, that's not so bad, but I see cards sometimes that have $200 or $500 annual fees. Just make sure that the benefits align with what you want. So for an example, if it's American Express and they're going to give you, let's call it $10,000 with a $99 annual fee, what do you get for the $99? So think about it. You could get points or rewards. These all offer some sort of benefits, and I would look at them and maybe use that to make my decision. But to be truthful, what I'm really looking for is the interest-free loan. So even though there may be some rewards in the future, I would be looking for interest-free loan with no fees. Now, if you intend to use these cards past the introductory period of 18 months, then obviously you want to look at the rewards, like if you're thinking about credit cards for mileage, or you're thinking about rewards for groceries or restaurant shopping, cash back. All of these are great. Now, those depend on your particular flavor, if you will, or what you want to do, but these credit cards are all around you. And I think recently I was on Google and I saw that NerdWallet had a list of 0% business credit cards that you can apply for, and I think that's a great resource. All right, now that we know enough about what we want to get, how much we can get, what we need to get it, let's just make sure we have some ground rules before we go out and apply. So before we apply, just remember, your credit score is a huge indicator if you're going to get approved. So if you have a 740 or above, that's a great opportunity for you to apply for credit. Next, know your utilization. If you are utilizing your credit cards or your extensions of loans, just make sure that it's under 30%. So you can see this, by the way, I usually use Experian.com, and I created an account. I think I pay $15 a month, and I just go there and I check my utilization. In addition to that, you want to make sure that you're on time with your payments. If you're late on any payment in the last 6 months, there's a very likelihood that the bank won't lend you any money because they're going to think you're going to do it again. So you have to make sure that you're on time with your payments, that you have utilization less than 30%, you have a 740 score. This is pretty much to guarantee that it's going to work. And lastly, you want to make sure that when you're applying for these cards, that you haven't been applying for like 30 cards in the last 3 months. The reason I say that is because the banks do look at and they make sure that you're not just extending credit everywhere, because they may think that you're in a bad situation. Remember, the banks don't want to lend money to people who need money. They want to lend money to people who are worthy of borrowing the money. And they determine that by determining your income and looking at your credit history and those things and the utilization. So you got to make sure you look really good to the banks when you're doing these things, because paying your bills on time is what they want, and they definitely don't want to lend you $10,000 if you can't pay them back. So when you're applying, I want to give you a few tips, okay? So if you go to a website like American Express and you already have an American Express personal account, I would encourage you just to log into your account, go online, if Chase as well, any company in most cases, but American Express for sure. If you go onto their website and you apply for another card, just so you know, they don't do a hard credit pool. And let's articulate that. So hard credit pools are typically when they pull a full, thorough credit report on you. And typically that's an inquiry. Typically that could impact the credit score. Like typically when you get an inquiry, you get a 1 or 2 point reduction. And that's what you call a full, thorough, hard credit pool. But when you have an account, let's say with American Express, and you go and you try to apply for a new card, if you log in through the portal and you're already in your account, you can apply for a new card, and typically that's a soft pull, which means it's not going to be a full, thorough credit report. It's not going to impact your credit at all. It's just a profile update, which is really cool. And in addition to that, when you're applying for these cards and you get, let's say, a lower limit than you expected, let's just say that you think you could get, 10,000, but they give you 5, or you think you can get 25, but they only give you 10. Typically, you can call in and talk to somebody to reconsider your application. Now, there are different numbers for that, and they change them from time to time because people do this often. You want to go on Google and type in American Express Business Recon line or Reconsider line. And there's always a number. You call the number, Chase has one, Bank of America has one, all of them have it, and you call in and you're just like, hey, I applied for a credit card, I only got 10,000, I don't know why, can you explain to me? Or if they deny you, you can call and ask this too. So if they deny you for the card, you can call and say, hey, why am I denied? And then they'll say X, Y, and Z, and they're gonna say they're gonna send you a letter or they're gonna do something. Whatever they say, just so you know, here's a big tip. Don't take whatever they say Is there any way you can reconsider to get me to 10,000 more, right? Like you actually are negotiating with them to extend this credit. Don't think that whatever they say is in stone. In fact, you're talking to a sales guy or a account rep, and it's probably somebody that's in India or something, and I hate to say that, but it's true. So you want to just say, hey, can we reconsider this? Doesn't always work, but if you can really be persistent, I can promise you something, at least they'll consider it. Doesn't mean it'll work, but they'll consider. When I did this with One American Express, they increased my limits from $15,000 to $50,000. So it is possible to get your credit limits extended if you know how to talk to people. All right, now let's round out here with just knowing what the benefits are to us by buying real estate. Number one, if you buy real estate, especially in an economy like ours, you know that there are tax benefits. I talk about this all the time in all my content because tax benefits is what we're looking for in everyday purchases. Now, buying with credit cards typically isn't going to get you a tax benefit because number one, you're only going to buy a piece of property with a credit card if you intend to flip or make money with it. Because long-term rentals would require you to pay this credit card over time, and you don't want to pay the 18 to 24 or whatever the interest rate's going to be when the introductory period's over. So you want to buy only properties that you could get into to rehab and refinance or to fix and flip so you can make some more cash and pay off the cards. But if you decided to do a renovate and then refinance, like that would be a BRRRR strategy, now you're going to get the tax benefits from maximizing real estate professional status or cost segregation, which are some of the topics I talk about in my other content or my other videos rather. But you want to make sure that you understand that buying with a credit card doesn't necessarily give you tax benefits, but it could be if you know how to maximize your investment strategy. Now, how does this apply to wealth? Well, when you borrow money that has 0% interest, like on a credit card, you are now leveraging money, which is very important because the way you get wealthy is you leverage other people's money like a bank, and you buy assets like real estate and you maximize those assets. So that could be a fix and flip where you make $30,000 to $50,000 in a 30 to 60 day cycle. That's great. Like, I applaud you. Now you're building wealth, and you take that 30,000 and you go do another deal. And remember, you've got 18 months in most cases with these credit cards. So you just rinse and repeat, rinse and repeat, rinse and repeat until if you can create a critical mass. So let's say you do every 90 days, you do a new flip. That is in 18 months, that's 5 times. So you do a flip, a flip, a flip, and a flip 5 times. Let's say that each flip you're making $20,000. That is a $100,000 profit over the 18 months for 0% interest. Think about that. That is how you build true wealth. I make $100,000 with the bank's money, and I paid no bank any interest. That's incredible, and that's a wealth building strategy because we believe in our companies, and what we do is about building wealth. I believe that building wealth, you have to keep, grow, and invest all the time, right? Keep, grow, invest, and protect. And what I want to help you do is do those things by leveraging other people's money. And you can do this by maximizing credit card utilization and maximizing your opportunities in real estate. So if you like this content and you think this is something you could get more of, please like, subscribe, comment if you have a question about credit, or if you did go out and do this, comment below and let me know which credit card you used and if it had good points or perks, because I'd love to know more about that. If you are an investor in real estate, I would love to work with you at some point. And if you want to save on taxes, invest your money and protect that stuff, please keep watching and helping me promote the message of building your own economy. So I really appreciate you watching this episode, and I'll see you on the next one.